Hi there, welcome to Kneppy Invest and welcome to May 15, 2024. We have about an hour left in trading today. And if I'm honest with you, today has been a fairly dull day in terms of announcements. I do have a top five, but when you compare this top five announcements to previous days, fairly dull, fairly boring. No significant trading updates. Some results have been released today. But even those results were were released from companies that I don't really follow all too closely. An agricultural company, CSR, but they've been taken over. And there was one other company that I've never ever heard of, Almonte or something like that. But other than that, pretty good day on the markets. Most of the indices are up. Small caps only up 0.1%, but resources up 1.16%. So the agenda for today's video, I'll go through a few tweets because tonight is fairly important. We are going to, or the Americans will reveal their CPI numbers, and the market might rally significantly or fall significantly on the back of whether the number that does come in either beats expectations to the upside or downside. And we'll have a look at a few tweets in regards to that. I'll have a look at the ASX today, the best performing, worst performing companies, and then we'll have a look at the top five announcements of the day. And if I have any time, we'll look at some charts. Now let's have a look at some tweets. And we'll have a look at this one from Markets and Mayhem in regards to what JP Morgan thinks is going to happen to the S&P 500 based off the April CPI numbers and the probability. For instance, JP Morgan thinks there's a 40% chance the April CPI numbers in America will be in between 0.3% and 0.35%, but seems like they're covering all their bases because they think the S&P 500 will either be down 0.5% or up 1% if it's in that range. So definitely it seems like they're covering all their bases. I like to use baseball jargon because this is America and they love their baseball over there. A 10% chance CPI comes in above 0.4%. If that happens, JP Morgan says the S&P 500 might be down as much as 2.5%, but if it comes in below 0.2%, they only have a 2.5% probability of that. We will see a pretty good day on the American markets. They also, Markets and Mayhem also did Goldman Sachs. So fairly similar Goldman Sachs, but they think if it's below 0.2%, S&P 500 will be only up 1.4%. But if it's above 0.4, yeah, pretty bad day on the American markets. A nice little tweet from Bar Chart. This was a conference or maybe not video conference, but C-SPAN 2 in 1994. Peter Lynch talking for about 2 minutes. The market will go down sometimes. It's a good thing when it does, but if you're not ready for that, you shouldn't own stocks. One of my favorite fund managers, Peter Lynch, have a read of his book, Went Up on Wall Street, and you'll probably see why he's one of my favorite investors. What else? Lance Roberts talking about market cap to GDP ratio. I don't like this sort of ratio because if you go back through time, well, not through time, but if you look at the big companies on the NASDAQ, New York Stock Exchange, they're global companies today. That's why we have seen this particular ratio rise. But a lot of people think because it's at heightened levels or at higher levels than it's been, that means the market is overvalued. I don't believe in that. And Lance Roberts also released this one, annual US total fertility rates, 1965 to 2023, 1.62 right now. Replacement level is 2.1. This is a problem throughout all of Western society. And I think it's creeping into other countries. China, this is a problem. Korea problem, Iran a problem, Mexico a problem. The only problem, or the only geographic areas where this is not a problem, fertility rates, is Africa. Now, there's going to be a group of people say this is a great thing for the world because there's just too many people. But if governments are looking for growth, they're not going to get it eventually, finally, soonish, without significant immigration because we're just not having babies. But I think this is nature way of telling us we are overpopulated. And a lot of people just don't have the desire to have children. So either if you want to increase fertility rates, you've got to motivate them financially incentivize them to have children. But I don't think it's really a big problem moving forward. Uh, and it's another reason why automation is really important, because the problem moving forward won't be there won't be enough jobs for all the people. It's there won't be enough people for all the jobs. Hence why automation is really important. Okay, that's all I'm going to talk about when it comes to tweets, because we're already 5 minutes into this video. And I want to keep the length of this video to 30 minutes. So let's see what's happened on the Australian markets today. And first thing we'll have a look at is the indices. And generally flat, rose initially on open, and it's been flat during the rest of the day. So unlike yesterday where we saw the markets or the indices fall through the day, flat today. So materials had a good day. We already know that. Up 1.39%. Healthcare, good day. Telecommunications, good. Real estate, good. Discretionary, good. Staples, all above 0.5%. Financials down, industrials down, and energy down. And looking at the indices, that's the sectors. Looking at the indices on the right, banks are down 0.27%. Well, I can't rank this by. I'm going to have to look at the ASX indices. And I think we know. Do we really have to look at the indices? We know just by looking at the sectors, which sectors are good. We're just going to have a quick look at the ASX 20 just to see which companies have performed and which companies have not. Based off the banks down, financials down, I would assume most of the big banks are down. And we can see that just by looking at this. 10 are down, 10 are up. And by looking at the worst performing companies in the ASX 20, Transurban, Macquarie, ANZ, Woodside, National Australia, Westpac, WiseTech. So we have quite a few banks there, and energy. And the best performing companies today, BHP, REA Group, QBE, Aristocrat, CSL, Rio Tinto. So there is a bit of an iron ore flavour there. And then Aristocrat and CSL. I don't know. Definitely an iron ore flavour because Fortescue is on that list as well. Funny enough, Commonwealth Bank is up 0.38%. So even though Commonwealth Bank is significantly overvalued right now with PE ratio above 20, people are still buying it. Happy to buy it. Let's have a look at the best performing and worst performing companies. See if any companies that did make it into my top 5 are on this list. Sun Silver is there. And this company did make it onto my list at number 5. You might say, well, if the share price is over 105%, why is it number 5? And I'll talk about why in a second. Australian Gold and Copper, up 100%. This company did not make it even onto my radar. Did the company release an announcement today? Yes, they did. Achilles delivers outstanding gold and silver results. So what I'll do is I'll have a look at this company's chart at the end of the video. What's the ticker code? AGC, because I completely missed this one. That is the reason why I go through the best performing and worst performing companies, because sometimes I miss announcements. Arawara Resources, that company's share price has been quite volatile. Renascor, Eastern, nothing else here that is of interest. Let's have a look by market cap. Vulcan, well, that's of interest to me because I am trading Vulcan right now, so I'm very excited. We have Aries Resources, Copper. I'm not surprised to see copper companies here. Hillgrove, which I am trading right now, up 7.4%. The reason I'm not surprised by that is because of copper. I did see a few tweets that copper has hit an all-time high. So we'll have a look at the copper chart at the end of the video too when we look at charts. And other than that, nothing else of interest here. So let's have a look at the worst performing companies. And Camplify. Camplify did make it onto my list, or did make it onto my list. Number 1, there you go, number 1. Share price down 19.2%. So not a surprise to me. Maybe a surprise to you. Anything else here? Nothing that I can see. So let's have a look by market cap. BSP Financial, not surprised. That was up a lot yesterday, down a lot today. Helios, Main Pharma, unfortunately down 7.4%. I took a position in Main Pharma for a bounce. It's not bounced. It's gone the other direction. Avita Medical had a good day yesterday. It's gone up a fair bit today. So it is concerning Main Pharma is a little bit down today, but I think there is a little bit of pessimism in this company because of a presentation. The company released, I saw nothing in the presentation to cause this nervousness in that company. I'm going to have a look at Helios. Did they release anything? They did release something in regards to refinancing debt yesterday. So maybe I'll have a look at that chart at the end of the video. Have a look at Main Pharma as well. So maybe I should be getting out of Main Pharma pretty quick because that trade has gone against me violently, unlike Vulcan, which is up. And I think that's it. Anything else there? No. Oh, Mayfield Group down 80 point. Why is Mayfield Group down? Well, I think it's just nervousness, a bit of selling. Mayfield Group down to 80.5. Not high volume, 110,000 shares traded. I think it's just some people just dumping on market because the share price is not moving in the direction. So if you have a look at the chart, we'll have a look at that chart as well if we get to it. I'm not concerned about that position. It's really cheap, that company. And I think it's just traders thinking the share price was on a tear and it's going against them. So they're dumping on market just based off the share price movement here. It's dumping. Someone dumped big at 2:48 p.m. Share price actually dumped on open and then rallied back up to 86.5 cents at 1 p.m. And then someone else dumped on market again. So 2 dumps on market has caused the share price down 10%. It could rally another 10% tomorrow, just based off the orders. Yeah, I'm not concerned. There's no big orders. You can see from 80 cents all the way to 90 cents, there's not much on the seller list, very small orders. So this could rally significantly tomorrow if, who knows, on a whim, someone's whim. So that's not what I'm concerned about. This is more of a longer term trade for me. Okay, so let's have a look at the top 5 announcements of the day. A few other companies did not make it into the list that I could have. Now, I did think hard about which companies to include because, to be honest with you, none of the top 5 were that interesting. So Black Cat 8, BC8, almost made it. Black Cat Syndicate almost made it into the list, up 1.6%. CSR released their results, but that company's being taken over, so I didn't really want to focus on them. Another company called Karma Corporation or Karma Co. released an announcement. It's sort of a trading update or sales update. Company's fairly small, share price below 1 cent, so I decided to exclude that company. Company called RAS Technology, Race and Sport Technology, down a little bit. That was on the back of a change or partial share sale. I thought the share price might have dropped a bit more than that, but it doesn't seem like the market is too concerned. And I was going to have a look at a company called Bezra because I was looking at this company about a year ago. Share price got up to about 44 cents. Now it was below 10 cents. It has a little bit of rally today, but they did receive a where query from the ASX. So let's have a look at the top 5 announcements of the day, starting at number 5, which is Sun Silver Limited. Now, it says the share price has not increased today, but this is an IPO. Sun Silver is, I'm assuming this is a Silver Explorer. So Sun Silver SS1, it has listed on the ASX today, and I'm pretty sure that is silver. AG is silver. Pretty sure that's silver. And so shares listing price, 20 cents. This is what I want to talk about. So they listed at 20 cents. So if you bought at the IPO at 20 cents, you have doubled your money because the share price right now is 43 cents. Market cap, not 24.9 million. It's now 50 million because the share price is higher. Looks like their project is in Nevada. Well, that's an interesting place. Nevada is ranked the #1 mining jurisdiction globally. Well, there you go. You learn something every single day. I had no idea. So this is just a new IPO, and the market has got excited because of silver prices and the potential of silver prices to rally from here. No point to look at the chart because it's only been trading 1 day. But if you've been a shareholder or you bought in the IPO, you're probably a very happy person right now, and I'll probably be selling. That's just me. So that comes in number 5, is a new company on the ASX, and we haven't seen many IPOs in 2024. Very few IPOs in 2024. Maybe 8, maybe. I think it's less than 10. Anyway, coming in number 4, we have Brookside. So Brookside didn't release anything interesting today. Share price hasn't really done anything. They did have a presentation. They release these drilling updates every single week. Now, I do have a small position in this company. And funny enough, I went to Hot Copper just to see the mood of investors there or posters. And the mood was really negative. The mood around this company is so negative, and they're just saying, oh, the management is horrible, that sort of thing. But one of the reasons why the share price is not rallying, even though I think this company is significantly undervalued, is because of the negative sentiment among shareholders. Makes perfect sense. If they're really negative, whenever the share price tries to rally, they're selling into it. And so we need, or this company needs, a complete makeover when it comes to shareholders on the registry. So this is their investor presentation. So the market cap of this company is like 65 million with about $30 million of cash. And there is significant upside moving forward. I'm pretty sure they do mention it in here somewhere. I don't care about all this. So they talk about production is going to ramp up. Here's their revenue and net income over the last 4 years, and it's ramped up. And they're expecting revenue and income to ramp up over the next 5 years. So this is their project economics, $164 million of revenue, income of $58 million. And here it is, yeah, average net production increasing quite significantly over the next 5 years, and the revenue or projected revenue in income over the next 5 years. In fact, by 2028, they expect revenue of above $100 million and profit or net income of about $50 million. So again, this company has a market cap of 65 million and about cash of 30 million. They're profitable, generating cash flow, definitely operating cash flow, but maybe not free cash flow. Let's have a look at the last cash flow report released on the 30th of April, not that long ago. And now this is a position I am not holding for the longer term, a trading position I'm holding for the longer term. I don't think there's much to the downside, so limited downside risk, but pretty good upside risk. That's the main reason I'm holding a company like this, because again, if you look at their cash flow statement in this particular report, it's all the way to the bottom. There it is. No, it's not. Whoops, wrong one. So cash flow or receipts, 10.2 million, and operating cash flow, 5.2 million, and they spent $2.7 million on exploration and evaluation. So they were operating cash or free cash flow positive, 2.5 million. Cash on hand increased from 26.2 million to 32.7 million. So there's a lot of, this company is de-risked to a great amount. And I just think there is a pretty good upside. But it's just the sentiment in current shareholders. And I think a lot of that sentiment is just the chart. Share price has done nothing. And so because the share price doesn't run, shareholders get disappointed, upset with management. Here's the chart. I think the downside is there. I think the lowest I think the share price will get is maybe 1 cent. So it's 1.3 cents. But whenever the share price tries to rally, we've seen it now a couple of times in the past year, whenever the share price tries to rally, we get too much selling. And that's because of negative shareholder sentiment. So that sentiment needs to shift. Coming in at number 3, we have Australian Agriculture Company. This company did release their full-year results. Share price down 2.5%. I did have a very quick look at this. It's an agricultural company. I have very little interest in agricultural companies. So profit, 50.5 million down, 17 million from last year. Revenue of 336 million, up from last year. So obviously the margins have decreased. Operating cash flow, 9.3 million versus $16 million from the previous corresponding period. So on the surface, the numbers look pretty bad. So not surprising to see. Now, that's on the surface. I don't know this company at all. I don't know the expectations. So maybe some of these numbers weren't as bad as expected, but the share price is down. Then I had a quick look at the chart, and even the chart, I am just not interested in this company. So this is the daily chart, absolutely nothing. I then had a look at the weekly chart, and absolutely nothing. Yeah, why? And my thinking is, why would you be invested in this company for the long term? Maybe the share price, is this the right company? AAP? AAC, this is the wrong company. AAC. Now, yeah, so this is a better chart. It's more liquid, this one, and it goes back a longer time. But and again, the same story. Why would you be invested in this company? Just look at the chart. This is over the last 10 years. It's done absolutely nothing. Share price has gone sideways. Now, the only time I'd be thinking about buying shares in this company if the share price falls towards $1. $1.38 now. The share price high has been above, it's been above $2 twice in the last 10 years. 2016 and then again in 2022. If it got above $2, sell. Buy at $1, sell at $2. That's the only way you're going to make profit out of this is just by trading it. At this point in time, no reason to trade. Australian Agricultural Company. The market cap of this company is about 800 million. So remember those numbers. This company has a market cap of, oh, I did again, the wrong ticker code. Company has a market cap of 831.8 million. There you go. So that comes in at number 3. Coming in number 2, we have Iress. I'm also trading this company, and the share price was down 2%. It was down by about 6% earlier. Now, apparently, they had unauthorized access to the Iress code repository that was not marked price sensitive. Today, updating the Iress unauthorized access incident. Now, the reason I'm included this company in today's list is because a lot of times the market overreacts to incidents like this, completely overreacts. Whenever there's some sort of incident like this, which is a short-term incident, a very short-term incident, the market overreacts. They think the world's coming to an end. They sell off, sort of like what's happened with Iress today, and then always the share price recovers fairly quickly. So Iress has been investigating unauthorized access to its user space on GitHub, a third-party code repository platform which manages software code. It has been discovered that a credential within Iress GitHub user space was stolen and used to gain access to Iress OneView production environment. This production environment is isolated to the OneView business, MFA platform, and OneView Super. So it's limited, small, and then the market has, I'm going to say, overreacted. So let's have a look at the chart. And we'll have a look at the short-term chart, the really short-term. Now, if you look at the daily chart, well, the weekly chart looks pretty weak. If you look at the daily chart, share price going sideways. Now, the company did release a positive financial trading update the week or so ago. The market hasn't responded to that just yet, but things are moving in the right direction for the management of this company. Now, let's have a look at this overreaction from the market today. So let's have a look at the 1-minute chart. And you can see it. On open, share price plunged. In fact, the share price went to a low of about $7.83. $7.83, and the share price has recovered. There was a nice little bounce, bit of selling, and the share price has recovered. This is just another instance of the market overreacting to an incident that's going to be fairly minor for the company overall. It's nothing structurally wrong with the company at all. So this could have been an opportunity to buy into this company if you're following it. You could have bought on the dump this morning and made a nice little profit, very short-term profit. Okay, so coming in at number 1, we have Camplify. Now, this came in number 1 because I actually did have a look at the share price. I went, oh, the share price is down. I think it was like 18% when I decided it will come in number 1. And they did release an announcement called Paul Camper Migration Update. Now, a few interesting things about Camplify. The share price has been tanking, and obviously the market has reacted really badly to this particular announcement. And here is why. So the platform migration, I'm not sure, this must be some sort of migration project or something. Well, they say migration update. So they began the migration project to move Paul Camper users to a single global platform. Now, this has been a problem. And they've mentioned all the problems here: technical complexities, customer migration issues, project was extended, the platform migration and challenges in customer transition has had a material impact on customer bookings and activity for the period of migration. This impact has had a flow-on effect for financial year 24 revenue for Camplify of a reduction in revenue for the year of between $3.5 and $4 million. So this is, in a way, a trading update that is highly negative, and the share price is down 21%. Hence why this company has come in at number 1, even though it just took me to see the share price down a lot to put it in at number 1, and that's the way it goes. But the chart looks absolutely horrible for this company. This is the ugliest looking chart. But if you, for some reason, in this company, I don't know why, you had a chance to get out, share price moved into a really well-defined downtrend. In fact, it moved into this downtrend on the back of their half-year results, released on 21st of February. I still remember that day. Share price of this company fell 16.7%. Share price bounced. So this was people thinking this company was cheap because it fell 17% in one day. And you could have sold the next day, which 2 days later, at about $2.30. And now share price is $1.15. Share price has halved since then. Share price has halved in just over 2 months. And this is another really negative day for Camplify. No reason to be in this company, in my opinion. Share price is now below the lows we saw back in August 2021. Look at that rise in share price. So there was a lot of interest in this company just after it IPO'd, and now the share price is below that time. So negative times for Camplify. And at this point in time, no reason to be in this company. Lots of negative sentiment behind this company, not helped by Tourism Holdings negative trading update as well. And that has had an amplified, this announcement has had an amplified effect of that negative announcement from that other tourism like company, camper van type company. So I was going to show you 5 charts. Let's start off with copper. I do have like 4 minutes left. So copper, oh, look at that copper chart. So someone did say it's reached an all-time high. Yes, there it is. Yep. The previous high was in March 2022, and copper in the past week, actually is this week, not the past week, this week is up 7.6%. Is it any surprise that copper companies are on the run right now? Is it any surprise that a company like Castillo Copper have said up 28.6%, and this company could have made it to the list, but look at the share price. They have plans to develop the Big One deposit at Mount Isa Copper Belt because of rising copper prices. This company was in a tank, and now the market is getting interested because they are in copper. Okay, so that's copper. Now onto a few other charts. AGC. So Australian gold and copper. So obviously this company's share price is running because gold and copper are running. But look at the chart. This chart is looking pretty good. Ran up yesterday by 21.2%. Loose lips, anyone? And now another 100% today. So I probably wouldn't trade this just because that sort of announcement is not the announcement that will induce me into a trade. And I'd like just to see what happens to the share price over the next few days. You wouldn't be surprised to see the share price plunge 20, 30% in the next few days. And HLS, Helios, share price down a little bit today, was actually up yesterday, 4.7%. So this chart does not interest me at all. This is an ugly looking chart. And even though share price has rallied on occasion, so has been rallying on some days over 6%, but share price in a well-defined downtrend, so no interest in Helios. Main Pharma, I thought this was a possible bounce. It's playing against me. 2 big down days in a row, and it's fallen through my get out of the trade, and I'm going to get out, more than likely. So for some reason, the presentation the company released yesterday, I had a look at it. I saw nothing untoward in it, but obviously the market is against me with this one. That happens at times. And I thought if I looked at the 1 minute chart, you can see a nice little bounce late yesterday, but the selling came back in on open this morning, and yeah, the chart looks pretty ugly for Main Pharma. So sometimes that happens, but the most important thing is protect your capital. This trader went against me. Share price could fall another 50% from here. I just don't know. It could rally, but I just don't know. Protect your capital. Market is against me on this one. And finally, we'll have a look at Mayfield Group. Share price has gone down a lot, but share price is still an uptrend. So share price went up a lot. You can see it was rallying in the last few weeks, and just because it's fallen 10% today doesn't mean the uptrend is in trouble. In fact, slightly higher volume today, but in the last few days, very low volume. So not a lot of selling. Today we have seen a bit of selling, but I think eventually we will see buying coming in as the share price has fallen, and I would not be concerned right now with Mayfield Group, and I still think the company is cheap. Also has a dividend, so 2.25% dividend. Price earnings ratio now probably with a 10% drop is right on 10, where I do think this company is good value at prices of 80 cents or around that. Anyway, that's all I got for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.